So what are we going to revise in today's lesson? I've decided let's do a bit of revision on stock valuation. Now remember guys, this particular section of work often appears in your exam. If not in every exam, there's always a bit of stock valuation. And from my experience, students that practice this section of work often really get good marks in this particular question. So I'm hoping today's revision lesson is going to help you do just that. It's going to help you in terms of your confidence for this section of work, and it's going to help you realize that, hang on, I can do this and I can get marks in this particular section. So let's begin. Now, when we talk about stock valuation, remember the focus is obviously on closing stock and the method the business uses, the stock valuation method that they use to value their closing stock. Now remember guys, your closing stock is obviously reflected in your balance sheet. So the method of stock valuation that you could use when valuing your stock could be the first in, first out method, your FIFO method. You could decide to use the weighted average method. And then we have something called the specific identification method that you could use. Make sure you are familiar with all three methods of stock valuation, because often in an exam or in a test, you could be tested on not just one method, but a combination of methods. Right, so let's begin with today's question on stock valuation. So the question that I've taken is from a past paper, and obviously it's on inventory. Inventory, another word for stock. So this particular question, 33 marks, 20 minutes. So let's go through the info and then we can tackle the actual questions. So the information given, you are provided with information relating to Sharks jerseys, a business selling one type of rugby jersey. So the product that we're dealing with is a rugby jersey. The business uses the periodic inventory system. Now remember guys, periodic inventory system must not be confused with the stock valuation method. They are two completely different concepts that relates to stock. So when we talk about stock system, periodic or perpetual, we are talking about how the movement of stock is recorded. But when we talk about stock valuation, we are now referring to how closing stock is valued in your balance sheet. Okay, so don't confuse the two. Periodic inventory system looks at the movement of stock and how we record that particular movement. Right, information given regarding rugby jerseys purchased and sold during the year ended 28th of Feb 2019. So as usual, you will often be given a table with information regarding your opening stock, purchases, returns, etc. So that's exactly what I have in front of me. So I've got stock on hand on the 1st of March 2018. Carriage on purchase is included, and immediately tell yourself that is my opening stock. Then I'm given purchases during the year. So we purchased in April, in July, and in November. And as expected, the purchase price for each month is different. So April, July, November, and February, as you can see, the purchase price for each month is obviously different, because that's what often happens. Your cost price will be different every time you purchase stock. Then we've got returns of purchases made during February, so we'll deal with that later on. And then stock on hand on the 28th of Feb, 145 units unsold at the end of the year. And obviously the value is not given because you are expected to calculate that particular value. Then the rest of the information, let's quickly go through it. Carriage on purchase is 10 Rand per jersey and is not included in the above purchases. So remember, carriage on purchase obviously needs to be included. Information 3, the supplier refused to refund the carriage on the goods returned in February 2019. Information 4, the selling price is 355 Rand per jersey. So I'm just going to make a note of that. That's my selling price. And then finally, information 5, during the year, 1,670 jerseys were sold. So remember, this is the number of units that were sold. Okay. Right, before we tackle the first question, something else that I want to make very, very clear. So looking at the table, guys, as you can see, number of jerseys. So remember, this refers to my units, right, or quantity, number of jerseys. Cost per unit, in other words, the cost of one jersey. And then I've got total value, which is obviously the units multiplied by the units to give me the total Rand value. So as you can see, the total value has been calculated each time, making my life slightly easier when I'm doing the actual questions. Okay, right, so we've gone through the info. Now let's go to our actual questions. The very first question, calculate the following using the FIFO method of stock valuation. And the first calculation, calculate the value of stock on hand. And obviously they're referring to stock on hand at the end of the financial year. Right, so remember guys, calculate the value of stock on hand. Here we are referring to your closing stock, or what I often like to say, unsold stock. So how much of stock do I have unsold at the end of the year, and what is the value of that stock? Remember, this is the figure that we take to the balance sheet. Okay, so we're going to start off with number of units unsold. So let's go back to our table, and we're going to the end of the financial year, so 28th of Feb 2019. So at the end of the year, we've got 145 jerseys sitting in our shop unsold. So units unsold, 145. We are now going to add a value to this. Okay, so to the 145 units, we're now going to add on an actual Rand value. So let's go back to our information. Now remember, FIFO method, stock bought first is sold first. First in, first out. Which means unsold stock comes from the last purchase and you make your way up. So what do I mean by that? Now, if you look at our purchases, April, July, November and February. So obviously February was the very last month that we purchased the jerseys. And in order for us to value our stock, we are going to move from the bottom towards the next purchase. So remember, your starting point is the bottom, the very last purchase. So if you look at the month of February, the number of jerseys bought were 140. However, in February, we also returned purchases made during Feb. Jerseys were returned and we returned 5 jerseys. So in other words, February is sitting at 135. 140 that we originally purchased minus the 5 that we returned. So in the month of February, we've got 135 jerseys. Now remember, in total, we've got 145 on hand. From that 145, 135 is coming from Feb. Okay, so let's fill that in. Right, so 135 is coming from February, and now we're going to add on an actual cost value to that. So let's go back to our table. In the month of February, the jerseys were purchased at, so February, jerseys purchased at 250 Rand. So remember that 250 is our cost price. However, for each jersey purchased, we had to also pay 10 Rand carriage. So that was our transport cost. So remember, the cost of the jerseys is now going to increase by 10 Rand. Okay, so 250 plus the additional 10 Rand. So let's fill that in, right? Watch how I'm showing my calculation. 250 plus 10. Or you can say times that by 260. Okay, so in February, right, the stock available, let's calculate that. So we've got 135, so 135 times 250 plus 10, which is 260. So times 260, and I've got stock to the value of 35,100. So let's fill that in, 35,100. Okay. Right, now let's value the remaining stock. Remember, there's 145 in total, 135 comes from Feb. So where does the balance of 10 jerseys come from? So let's go to our information. And again, I'm reminding you, I'm working from the bottom and making my way up the table. So February sorted, the next purchase was the month of November. So in the month of November, we purchased 460 jerseys. From that 460 jerseys, there are 10 jerseys unsold. Okay, so again, first in, first out. And I'm focusing on how many jerseys were not sold at the end of the year. So purchased 460, but from that 460, 10 jerseys are unsold. So the 10 jerseys, the cost price, 230 Rand. And remember, I've got to also include the 10 Rand carriage on purchases. So my cost, 230 plus the additional 10. Right, so let's fill that in. So I've got 10 times, in brackets, 230. Okay, let's just quickly check. It was 230 plus the 10. Okay, right, so the 10 jerseys are valued at 10 times 240, obviously 230 plus the 10, and that gives me 2,400. So 2,400, and I can now calculate the value of my closing stock. So I'm simply adding, and the value of my closing stock will be a figure of 2,400, let's just quickly try and move that. So 2,400 plus 35,100, and that gives me a total of 37,500. So my closing stock, 37,500. Okay, right, so as you can see, guys, 4 marks for this particular question, and not difficult to get 4 out of 4 for this particular question. Okay, remember, this is the figure you would take to the balance sheet. So if they had to throw in a question, where would you record 37,500? You would record it in the statement of financial position, or as we previously called it, the balance sheet. So that's the value of your closing stock. Okay, right, let's move on now to the next question. Calculate the following on the 28th of Feb 2019, the value of your cost of sales. So remember, cost of sales is obviously the value of stock that was sold for the financial year. Okay, so your cost of sales, very, very important, guys, that you remember the following formula. I'm going to take opening stock plus purchases, okay, minus the value of any returns, plus carriage on purchases, minus closing stock. I want you guys to please write this down, because I cannot begin to emphasize how important this formula is, especially in terms of the marks allocated. So let's go through it one more time. Opening stock my value of stock at the beginning of the year, plus purchases, what I bought during the year, minus any returns, plus carriage on purchases minus closing stock, and that will give you the value of your cost of sales. Remember, cost of sales, stock that ended up being sold. Okay, so let's now just substitute the figures into this formula. So let's start off with opening stock. So my opening stock on hand on the 1st of March is a value of 93,600. So let's take that through. So 93,600 plus purchases. So let's go to the table one more time. So my purchases for the year, you can show the individual amounts, but it's much easier. There's your total purchases for the year. Okay, if that total wasn't given, remember you're simply adding the 4 amounts to get your total purchases for the year. But since it is given, I'm simply going to take that through. So 287,600. So plus 287,600. Okay. Minus returns. So remember, returns obviously decreases the amount of stock that you have in your shop. So your returns of purchases made during February. So remember, 5 jerseys, and in February, each jersey costed us 250. So 5 times 250, that should be 1,250, but let me just quickly check. 5 times 250, okay, correct, 1,250. So 1,250 decreases the value of stock that I have available. Okay, so minus 1,250. Then carriage on purchase, remember you're going to add carriage on purchase. And remember, because we didn't receive a refund, okay, somewhere at the bottom here, the supplier refused to grant a refund on the carriage on goods returned in February. So we're not going to get a refund on the 5 jerseys. We've got to include all the jerseys when we're calculating our carriage on purchases, our total carriage on purchases. So purchases for the year, 1,470 in total. 1,470, remember we're including the 5 as well, times the carriage is 10 Rand per jersey. So my carriage on purchases should be 14,700. Okay, 14,700. So let's include that in our calculation, plus 14,700. And then finally, closing stock needs to be subtracted. So remember, we calculated closing stock in the first question. So we're now going to minus 37,500. Okay, so as you can see, guys, 1, 2, 3, 4, 5 marks for this particular calculation. So let's calculate our cost of sales. So now it shouldn't be that difficult. Let's get that out again. Okay. Oh, and it doesn't want to move. Let's just try and move it one more time. Okay, there we go. Right, so we've got an amount of 93,600. Okay, plus 287,600. Okay, minus 1,250. Then we are adding 14,700. Remember, carriage increases the value of your stock, minus stock unsold or closing stock 37,500, and my cost of sales is an amount of 357,150. Okay, so 357,150 is my cost of sales for the year. Okay, so remember what I said earlier on, cost of sales is obviously the value of stock sold. Okay, what did it cost the business? Cost of sales. Okay, Right, shouldn't have been that difficult, guys. Let's now move on to calculate your gross profit. Now, we all know gross profit is obviously sales minus cost of sales. Okay, so sales less cost of sales. If you ever come across debtor's allowance, please remember you are also subtracting debtor's allowance from sales. Okay, so let's calculate our sales first. Shouldn't be too difficult. So let's go to our information. Okay, so remember we're now looking at information 4 and information 5. Let's start with information 5. During the year, 1,670 jerseys were sold, so number of units, 1,670, and the selling price per jersey, I'm now looking at information 4, your selling price per jersey, 355 Rand. So obviously we're multiplying that by 355 to get our total sales for the year. Okay, so units 1,670 times 355, and that is giving us our sales amount of 592,850. Okay, so I'm just going to take that through. Okay, so my total sales figure, an amount of 592,000, so 592,850. I just want to double check that that was the answer I got. 592,850, correct. Right, sales minus cost of sales. Remember, here's my cost of sales figure. So minus 375,150, and I can now work out my gross profit. So let's do that. Sales less cost of sales, 357,150, and my gross profit for the year, 235,700. So 235,700. Okay, right. So guys, definitely not difficult. As you can see, very doable. Now, I know some of you are thinking, but hang on, Mahesh, what if I made a mistake in my first question? What would happen in that case? Surely I would get this particular answer incorrect. Absolutely true. So remember, guys, if you get the first calculation incorrect, then as long as we can see you are carrying your mistake through to the next question. So for example, let's just make up a figure. Let's assume you got an answer of 30,000, which was clearly incorrect. Remember, you are still getting part marks for your calculations, so please remember that, right? But obviously your answer is incorrect. You would then take 30,000 through, which again would be incorrect. However, because we've already penalized you up there, we would now give you a method mark. Okay, so in the event of you making that error, remember, there are still method marks that get carried through, which means you probably would lose marks in the beginning, but not necessarily towards the end of the question. Okay, so don't stress too much about that. And we're now moving on to calculate the percentage markup that was achieved, obviously, for this particular financial year. So remember, markup percentage, the calculation is quite straightforward. Gross profit divided by cost of sales. And because you want a percentage, obviously, you're going to multiply that by 100. Right, gross profit is coming from our previous question. So remember, there's our gross profit. We calculated it already to be an amount of 235,700. So that's my gross profit. Sales minus cost of sales, gross profit, divided by cost of sales. So your cost of sales also calculated previously. So your cost of sales, a total of 357,150. Okay, so let's get the calculator out and let's calculate the average markup achieved for this particular financial year. So I've got my gross profit already, divided by cost of sales, 357,150, and the markup achieved, let's just quickly change that, should be an amount of 65 or 66% if we just round that up. Okay, so I'm just going to round it up to 66%. Remember guys, follow the instructions given to you. They might tell you round off to the second decimal place or the first decimal place. Just make sure you follow your instructions.